Happy Monday, everybody. I hope you had a great weekend. Welcome to the new week, another week that I'm sure will be one to remember. Today is March 14th, 2022, and this is your Monday market update. As if you needed me to tell you, welcome to March Madness. Now, you may think I'm talking about the NCAA men's basketball tournament, but I'm just talking about what's going on in the markets and how things continue to play out in the news cycle. We have Russia, Ukraine. We have the U.S. Federal Reserve. We have inflation at nearly 40-year highs. We have nearly $6 gas, in some places even higher. Add in concern about global growth and U.S. growth for that matter. Sprinkle a little bit of global central bank action. China locked down again for COVID. Will that keep them too busy to talk about Taiwan? We'll just have to see. Take all that is a recipe for one pretty crazy March Madness. So we'll see how this all goes. So whether you're watching the basketball games on your favorite teams or just keeping an eye on your investments, hold on, we're still on the move. So let's do a quick wrap up of last week. Look into this week. This week is light on quantity but heavy on quality of news. So stocks started the week Monday with a thud as commodity prices increased, as well as the worry about Ukraine and Russia and the effect on the global economy. Stagflation came back into the conversation. The S&P 500 was down almost 3%, Dow down 2.5%, the NASDAQ down 3.5%. Tuesday, the markets tried to find some stability. Ukraine said that they were not looking for NATO membership. That, of course, was positive, but Putin announced an export ban, and of course that offset that, took the air out of that one. So the S&P 500 was down another 0.75%. Dow and NASDAQ were also down for the day. There was talk about energy independence again here in the United States. We'll see what happens with that. It's an interesting conversation to bring up again. Risk on returned on Wednesday in a big way. New sanctions were weighing on the Russians. Word was that actually may mean something to them. Is it wishful thinking? We're going to find out. They did agree to return to the negotiating table. All of that, and the S&P 500 was off to the races, up over 2.5% on the day. Dow up 2%, NASDAQ up 3.6%. The roller coaster continued on Thursday. Stocks moved back lower from the start. Lack of progress at the peace talks, if you want to call them peace talks. We'll see what we really call them. CPI was what we expected it to be. Remember, it was high. We knew it was going to be high. It came in about as expected. Surprise announcement from the ECB about their actions as the year goes forward. We may see rate hikes sooner than expected from the European Central Bank. Put all that together, the Dow, S&P, and NASDAQ all down, but all of them down less than 1% on the day. Again, that's bad, but we've seen much worse, and last week we saw a lot worse. So Friday was a day full of ups and downs, of course. Putin was quoted as saying that there were certain positive shifts in talks. That was a big positive. Fighting, unfortunately, provided the offset on that, and along with more economic news and sanction news, the S&P 500 ended the day down 1.5%, down nearly 3% on the week. So this week, as we talked about, is light on scheduled news, but not on importance. I mentioned last week that Jay Powell and the Fed are going to try to steal back the limelight. So let's be honest, we would be really happy to give him the limelight. It would be great for Ukraine and Russia. We will see PPI tomorrow. That's the producer prices. Remember, these are the costs that usually trickle down through the producers to the consumers in a couple of months. We're actually looking for a whopping 10 handle on that one year over year. Now, that's going to shell shock anyone who hasn't been paying attention. Of course, all the air that's left in the room will be consumed by the Federal Reserve meeting Tuesday and Wednesday, the announcement of what they're going to do with rates on Wednesday afternoon, and the press conference. Jay Powell did tell Congress last week that he was going to support a 25 basis point move in the Fed funds rate. Now, again, that if anything but that is announced, then watch out. We have to see what happens. We'll have to see if he foreshadows the coming meetings and actions. We'll also want to watch the dot plots to see how many rate hikes we should expect this year. As of now, of course, it changes every time. We'll be on the edge of our seats also to hear about how they're going to address the balance sheet of the Fed. So retail sales for February will be out on Wednesday. That's important. I tell you every time. Are you still spending the way you used to? Top off the week with some manufacturing numbers as well as the normal high-frequency job numbers. Again, if Powell and the Fed keep the spotlight, that is good news for the world and, of course, Ukraine. Overall, we know that everyone at this point is huddled on one side of the boat. We've talked about this before. When that happens, there are possible opportunities that we need to look at. Remember last fall. Remember we talked about the Fed. This is before they started this. They were talking about raising rates. Well, right now we're talking about putting some money to work here. So in this market. So depending on what your goals are, let's be in touch. Let's talk about some new investment plans of what's going on. We're always focused on the long-term planning, and that often has a lot to do with what you're doing in the short term. So please be in touch. As always, call or email with any questions. Watch for the investment planning video on Friday. Again, possible opportunities in a down market is a key. For now, stay safe, stay nimble, stay in touch. Have a great weekend. Have a great week. Sorry.